Okay, Mike here. Let's take a look at the market averages. I want to really focus on the Dow and the stocks in the Dow and try to figure out what's likely to perform the best this year in Dow stocks. And that'll give us an idea of where the strength in the sectors is likely to be going forward this year. But before I do that, let's talk about the Nasdaq 100 first. Going into this year, I thought there's a good chance we could see the stock market pause or even begin to dip. That's what happened in the beginning of last year. I still think at some point this year we are going to see a market correction. I mean, they happen at least once a year typically, and you typically will see a pullback down to the 150 and 200-day moving averages. It actually happened 3 times in the S&P 500 last year, but the first couple days this year have come and gone, and the QQQs, which is the Nasdaq 100, has made a new high. So I think a question then to ask is, how long will this breakout go on for? For example, in July, the stock market rallied following the Brexit thing and stalled out in August. The Trump rally basically lasted to the first week of December. So how long can this rally go on for? And to answer that, the best thing to do is look at some of the stocks inside the Nasdaq 100 that influence it the most. And those, of course, are the FANG stocks, the fad stocks, the most popular stocks that people trade in the stock market nowadays. It's almost like an obsession with people. So if you look at Facebook, what Facebook has done is it dipped after earnings in October, formed a support level, and it held support. I thought there was a risk it would break support in January, and that would lead to a correction, but it held, and it's now rallying off of support. So that gives us a target, a potential target of the high of October from where it is right now. The same story is true for Amazon. You're looking at a hold of support, a potential high of October. And that's the case of most of the stocks in the Nasdaq 100. They're not in a position to break out and make a new 52-week high and rally beyond that at this moment I'm doing this video. Instead, they're in a position to bounce up to the highs. However, a bounce up to the highs is enough to help push the Nasdaq 100 up, the actual index itself. But that suggests, though, an important point, is if you look at Facebook and these stocks, if they're going to rally up to the highs, they're most likely going to stall out there, or this move would stall out there, and then, you know, what do you get then? Is it more a consolidation of those highs, then a breakout later, or a dip, or a pullback? The important point, though, that's a question for later. The important point for now is that a rally from here is likely to take us up to the highs in these individual stocks, where you then have to see what's going to happen. And the market typically will rally into or at the beginning of earnings season and then have a temporary top and small pause or pullback afterwards. Even in bull markets that happens. So the earnings season is going to be beginning in the last week of January. That's when it really starts. So that's what we're looking at, a rally. And then in January, you know, positive news in individual stocks. Then we'll have to see from there with the broad market. More important, though, to me, I'm not, you know, we all have different time frames that we focus in on. And I like to invest in stocks not for trades I think that are going to go on for a couple of weeks, but for things I think can go up for months or even years. And that means focusing on the best sectors of the market that I think can go up the most, period, and then also asset classes that are in the same situation. So that means looking for stocks and ETFs that aren't merely bouncing off of support, but are in a position to break out to new 52-week highs and beyond. Because when you clear resistance, then you have something that's not likely just to go up to a high and then possibly pull back or pause, but something that can break out and go up and up and up. And those are really the stocks and sectors that drive bull markets, and that's where the real money is made. And those type of moves happen in one of two ways. Either they come with a breakout new 52-week highs, as I mentioned, or there's sectors that break out of key resistance levels that have formed for a very long time and are actually starting new bull markets. Obviously, Facebook and the QQQs and Nasdaq 100 aren't starting a new bull market. But last year, we saw gold stocks start a new bull market. This is the GDX ETF, and it broke out of a stage 1 base when it cleared 15. Basically, it formed this base here, and it broke 15 in February, and it became a huge leading sector last year. It outperformed the stock market, even though it dipped from August till New Year's. It was up 52% year to date last year. So it beat the market averages. It was a great place to be into for 6 months here, and I think it's still a wonderful investment for the next couple of years, even if we're now in some sort of pullback or consolidation phase. The point I'm trying to make by showing you GDX is that it broke out of a stage 1 base, and by doing so became a giant performer. So again, to repeat, for something to really go up huge, it doesn't just have to bounce off of support, but it has to clear a real meaningful resistance level, which GDX did last year, and or break out to new 52-week highs. So when it comes to the U.S. stock market, in traditional stocks, the question I think to look for is what's in a position to not just bounce or go up for a couple of weeks, but to break out of a 52-week high after consolidating below it. So let's look at the Dow and see what stocks are in a position to merely bounce and what stocks are in a position to really break out, because those stocks that are in a position to really break out are going to be the ones that really you should expect to outperform or be the market leaders in the Dow this year. So the simplest way to start to ask this question is I pulled up a watch list of the Dow 30 and ranking them by price. Goldman Sachs, okay. The bank stocks exploded since Donald Trump's election. The interest rates are now on track to go up at a higher rate than they were before the election. And that's going to mean higher profit margins for banks. And the bank stocks are benefiting, and they were among the top sectors of the market all of last year thanks to the November rally. Goldman Sachs had a tremendous rally from 150 to 260 or so, and now it's pausing, and it's got a very narrow range, and it's in a position to break out to new highs. So if the Dow's going to go through 20,000, Goldman Sachs is going to be a stock that's going to help drive that move. It helped drive the move towards 20,000, and it's a leading stock. If I had a choice between buying Facebook and Goldman Sachs, I would buy Goldman Sachs, because Goldman Sachs is not in a position just to bounce up to its 52-week high, but to smash through it. Let's look at 3M. 3M is not quite on the 52-week high, but it's closer to the 52-week high than most of the stocks are in the Dow. It's likely to continue to be a Dow leader because it's more likely to clear that key resistance level. Here's IBM right on its 52-week high. So here's a stock likely to break out and help push the Dow up. And IBM, I'd have to get out a calculator to be sure, but I think since February it's had a bigger gain than almost every stock in the Nasdaq 100. And it's been a leading Dow stock, likely to continue. Here's UNH, a healthcare company, also or insurance company, also in a similar position. How about Boeing? Boeing has also been a leading stock since the election of Donald Trump, sitting right on the 52-week high. Home Depot, not in that position. Home Depot is actually been lagging for 3 weeks here, but it can rally back up to its high, but it's not likely to smash through it. McDonald's is the same story. The Travelers Company got hit, so it's not likely to break out in the next couple of weeks and go to new highs. Apple actually looks like it can rally, and by clearing its resistance to the fall, but its 52-week high was set like 2 years ago, or November here. So it does have long-term resistance. It's not likely just to go up and go through it. So Apple's a stock that may be fun for a couple weeks, but it's got resistance going way back at 130 or so. It's not making an all-time high. Chevron, kind of mixed. Johnson & Johnson's off the high. UTX just broke out to a new high. That's good. It's one of the, again, it's a defense stock. The defense industry has been on fire since Trump's election. Here's Disney, which, you know, the chart on the short term right here looks great. But if you go back for a couple years, it's got resistance, you know, way up here, pretty significant. So Disney might be a fun stock if it can run up to 115 or even higher than that, which will help fuel the Dow up. If the Dow goes up, I'd expect Disney to go up. It looks like it's going to happen. But, you know, is it going to be a great stock 6 months down the road? I'm not sure. Caterpillar, it's a little mixed. Exxon's actually, you know, going sideways, I think. Doesn't mean it can't go back up to 95, but that would be part of a sideways pattern. JP Morgan, like Goldman Sachs, is a leading stock. Looks likely to break out to new highs, just right below it. Procter & Gamble, you know, it's kind of a mixed bag. Visa looks like it's going up towards its high, like Facebook and Amazon. American Express, it lags and it leads. Not as exciting as the others, but it's not in a position to go to an all-time high, or break it, I should say. DuPont, doing okay. Walmart is lagging badly. The S&P 500 and the Dow. So, you know, it's a stock that's overall sideways. It doesn't mean it can't bounce back up to 75, but it's not in a position to make a new 52-week high or an all-time high anytime soon. It's a lagging stock. Microsoft, it's kind of a mixed. It does look like it can go up, but it's not as exciting as Goldman Sachs and the others. So what we've learned, here's Merck off the high, Nike off the high, and so forth, Coca-Cola, Intel, Pfizer, GE, Cisco, all fairly off their highs. Doesn't mean they're immediately going to crash or something. They're just not exciting. So looking through the Dow, it's obvious we've got excitement in the defense industries, and the best is in a good position to break out and make new highs. It's been on fire since Trump's election, and Goldman Sachs and the bank stocks are in the same position. So looking through the Dow stocks, what can we draw from that? One, we see leadership there that looks like it's ready to go up. That could help drive the Dow to 20,000. We also see lots of stocks, or 20%, like Walmart, that look like they're just going sideways. They don't look like they're going to crash, but they're lagging. They're just not exciting. So if we want to be in the best stocks, the bank stocks are where we have things breaking out to new 52-week highs, or about to, in some defense companies. So that's what we can learn by looking at the Dow 30. Now, in this week's Power Investor Report, I also, in the model rebalancing portfolio, have just put in a new buy on a new ETF that has nothing to do with the U.S. stock market. It's not even breaking out to a new 52-week high, but it's in a similar position that I think gold and the gold stocks were in December and January, or December 2015, January of 2016, before they broke out of their stage 1 resistance and soared. I think this ETF is likely to break out this year. Not next week, but I think it's great for long-term investment. It doesn't trade at the U.S. stock market, and it provides diversification. So in the report, read it, and you'll find out about this ETF I'm about to put money into it now. I don't own it at the moment I'm doing this video because I did the report this weekend, but I'll be looking to buy it sometime probably this week. So read the report and find out about this ETF, because I think, if it does what I think it's going to do, it will vastly outperform the Nasdaq 100, even if the Nasdaq 100 is going to go up here for a few weeks at least this year, just like the gold stocks did last year. So that's update for today, and I'll be talking with you later.